Welcome to our guide on investing for beginners. Whether you're just starting out or looking to diversify your portfolio, understanding the basics of investing is crucial. In this video, we'll break down the three main types of investments: stocks, bonds, and index funds, and explore the pros and cons of each. Stocks. When you buy a stock, you're purchasing a share of a company. Investing in stocks can offer high returns, especially if the company grows and performs well. However, investing in stocks also comes with higher risk, as the value can fluctuate significantly based on market conditions. Bonds. Investing in bonds means you're lending money to a government or corporation in exchange for periodic interest payments, plus the return of the bond's face value when it matures. Investing in bonds is generally considered safer than stocks, providing more stable and predictable returns, but the potential for high growth is usually lower. Index funds. These are a type of mutual fund or ETF that invests in a diversified portfolio of stocks or bonds, aiming to replicate the performance of a specific index, like the S&P 500. Investing in index funds offers the benefit of diversification, reducing risk compared to individual stocks, and typically comes with lower fees. So, what's the best choice for your investing journey? It depends on your financial goals, risk tolerance, and investment horizon. Investing in a mix of stocks, bonds, and index funds can help balance potential returns with risk management. Thank you for watching our guide on investing for beginners. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more investing tips and strategies. Happy investing!